New week, new progress. I think I'm just going to dive right into it. It's the first publicly uploaded Sunday recap that I'm doing. I've previously done Sunday recaps every single week, as well as post-trade session evals. The reason I'm posting this is for accountability. That's literally it. I started my trading journey almost 3 years ago now. And moving into the third year, I feel like the first 2 years have just been experimentation and not acting upon a fixed strategy or consistency. For the past 2 months, I've had a lot to think about, as well as trying to implement something that works within a strategy that has consistency for me. And it's only now that I'm starting to implement systems to help me push through to get the consistency on a regular basis. So who am I? I'm a day trader. I only exclusively trade gold, XAUUSD. No, I don't trade futures, although I am considering making that move in the future. So I'm just about to enter my third year of trading. And at the end of 2024 is when I had my peak. I had 2 consistent 5K plus months on my personal trading account, but then quickly gave it all back to the markets. That's taught me a lot of lessons. It taught me that it wasn't so simple just yet, and what you can earn can be given back to the markets, if not even quicker than how you got it. And this experience has only given me more determination to keep going. Over the course of my trading career, the psychology has been my most important. The consistency has been here. I'm showing up to the charts every single day. But one key thing was missing, which is I'm not backtesting and I'm not actually investing all of my time onto the charts. I'm only sticking around for COMEX Open until just before late session NY. So the goal now is to get all of these things to work hand in hand with each other and make the pivot from personal account to prop firm capital. So I've, over the course of this year, been trading a prop firm account, which I haven't even passed yet. It's been 290 days that I've been trading it, and I'm still in drawdown and I haven't even passed it. Partly why I'm uploading this is to bring myself more accountability to actually pass this damn account. I'm going to go through my normal Sunday recap breakdowns. All right, so a brief overview of my week. We've only had Monday and Tuesday's trading sessions, so this would be relatively short. It's the 28th of December, so we had Christmas and it's lower volatility throughout this week as well. Monday's trade positioning is where I started to see a little bit more of looking into getting a system put into place. So the trade ideas that we had was actually looking at some form of liquidity area here to get a range 2 breakout. I typically trade range 2 breakouts on lower and higher time frame, utilizing the time frame bias. This one actually would have worked out pretty nicely in my favor. But for me, originally, or looking at this now, it makes sense that price action can drive from this area. Initially, what made sense to me is having this as a common liquidity area for price action to then come down, look at grabbing wicks to then start pushing you up. So my entry would have been at this particular area on a retest. Now, I'm quite fortunate that I didn't get into this because there was on the other time frames some confluence that told me, all right, 30-minute is closing with no bottom wick. Therefore, it's indicating no further range to the downside, not opening up with a bottom wick first to drive you back up. Therefore, price action tells me that, all right, you're not giving me too much of a confirmation in terms of the bullish structure to make a reversal at that support area. Therefore, I'm not going to enter, which was a good idea. I didn't. But now the question is, well, why didn't I take the trade when price action came up? Well, I actually don't know. And that's why after this trading session, I decided enough is enough. So I created a checklist. I think systemizing is something that's better to do. I systemize the way I wake up and go to the gym and train. So why not do it for my trading? It's taken me this long to figure it out, but we've done it. So it is a very simple checklist. The more simple it is, the easier it is to execute your plan. Marking out current ranges, which is fairly straightforward. Finding liquidity areas, which is my order magnets of where price is very common to reverse. Find out what price is mirroring, because we always know, and I've known this from the start, that price will always mirror traditionally prior historical data to the left of your screen. And then lastly, build narrative on timeframes. I've had the problem of jumbling all of this order up, and it makes me mixed up and confused with what my daily bias is. So having a 1 through 4 step-by-step system put into place actually helps me with vetting for potential positions, and actually having that system mean I have more consistent entry points and more consistent management of positions. So that was Monday done, out of the way. No trades, like I said, no trades on Tuesday either. It's the first system that I actually used an approach with my analysis with the systems, and that was here. As you can see, you've got the current ranges being printed out. So there's number 1 being checked off. You've identified the current range that you're trading in. I've identified where my stops will be placed, which is the next range below the area, and my validation entry point should be at these areas here. Now you'll notice, why did this trade come down? This is where time frame bias comes into play, which again, I didn't quite understand just yet in this trading session. This is where my daily candle bottom wick was, or matter of fact, you didn't open up with a bottom wick. You just came up for a top wick first. Therefore, in the session, I was already thinking price action doesn't quite have all of the time frame narratives being built. Therefore, I didn't enter this trade position. And this is quite interesting because I didn't realize this wasn't just noise, but it actually mattered. And it wasn't until after this trading session and I came back for a trade evaluation after coming off of the charts for a while. This actually is one massive retest for the daily bottom wick before price action can validate your idea. So I can't just very quickly neglect price action when price action just comes down to break below the range. I shouldn't be thinking immediately that price action isn't going to give me the validation I want. If I had realized that the daily time frame is just coming down to retest the daily candle to then close you back above, it's given you more of a reason to enter the trade position now because you've actually validated the daily through to the 5-minute timeframes. And this would be the trade outcome. So if we just go back, you've got the current range being printed, which you've identified where price is being mirrored, you've identified the previous range beforehand, so you know where to place your stop loss. Price action's given you all of the validations, including the timeframe narrative upon the daily timeframe with the bottom wick retest. Price action then comes up, you're looking for your classic retest at the validation area, which you get. So when price action comes down, you're looking at getting any form of entry in this specific area to then push price all the way up. And because we're utilizing a model that mirrors price action to the left of my screen, looking at common rejection points for the first opportunity that price action will reject that, which is this area. So my stop loss to break even to move risk off of the table is at this specific point. So once price action flies through this area, you're risk free off the trade and you're hitting a full TP trade. In my mind, this is a textbook play that I should continue to push forward. And I'm only going to know how this works when I back test and also forward test. It's all about the experience within the market. This is my version of my back test so far. We've got the 4 checkpoints, price mirroring, we've got the liquidity grab, the daily retest, price action comes up, textbook play. Perfect price action, and this is exactly what I'm looking to execute across the next week. And when price action volatility finally restores after the holidays, this is what we'll be looking to execute upon. So for my goals for the next week, for executing on my sessions is to use my 4-point checklist, increase exposure and experience on my charts through backtesting. And the noise, which was that retest on the daily for Tuesday's session, may not just be noise. So we'll have to look to see if it actually builds narrative to contribute or benefit advantage to what I originally wanted in terms of a validation point. And also tailored routines. This is context from my own personal life of what I do during my day, but having call out blocks to really arrange what my assignments are through the day is a massive factor into keeping the discipline through to the charts and keeping everything very simple. Those are my goals. This is my first publicly uploaded video. It's purely just for documentation purposes and accountability purposes. If you're interested in it, pop a follow, go down into the comments, let me know what you trade, let me know your strategy. And that's a wrap for this week's Sunday recap. Thank you for watching.